Good day, trader, and welcome to the webinar for the month of March. My name's Timon Rossalimos, analyst for Red Hot Storm Trader, and today I want to go through the Aussie, exactly where it is, the trends that's established, the trades that we've taken in the quarter so far, on how we've done. So I like to start off by looking at the overall market, which gives me an idea on where the market is going exactly and what type of trades it will be taking. So the interesting thing is from, let's say, January, near the end of January, the 25th, up till now, we've taken a lot of long. So we've gone long the market where you buy the market, hoping that the prices of those shares go up. And obviously we are dealing with the CFDs, which deals with the derivatives of the shares. But what's interesting is even though we've bought a lot of the shares and we've banked a lot of profits, the overall trend of the stock market, or the Aussie, has gone down. So that to me is always quite interesting, because when the market's coming down, I feel very jittery as to holding my shares longer, and that's why I like to move the stop losses to the point where we can actually bank profits, take them in joys for the quarter. Okay, so we can look at the ALMI, and you can see from December 2016, it has been going up this beautiful uptrend, and it's been bouncing on the strong support line until around February, the 2nd of February, where it broke below. And since then, it's entered into a bear trend or a downtrend, where I expected more downside for the Aussie. But not only that, but I expected a lot more downside for the shares in general. So I see that the resources and the commodities stocks have actually been coming down a lot more than the retailers, and that's why we've shorted Anglo. And in fact, if we look at Anglo quickly, it hit the lowered stop loss to 188, purely because the Aussie is showing conflicting movements as to whether it wants to go up or down, and also just to bank some profits during this volatile time. So the ALMI, as I said, is broken below, and now it has formed a cup and handle, which means that we can expect even more downside. In fact, I'll give you a level. I'm expecting the Aussie to come down to 40, let's say 41,000. Okay, so I'm using what's called Pro Trader, and it's absolutely fantastic with the charts, because they easily I can choose which price I want it to go to. So I want it at 41,000. Choose that, then I can change the appearance. I like choosing black for support lines. Okay, so that is where the target I expect the Aussie to go. So technically we should be looking for a lot more shorts in the market. Okay, so once it breaks below this inverse cup and handle, I expect it to come down, and we'll look for those industrial and resource stocks to short. But remember, it's at the back of your mind that you're saying the Aussie's in a bear trend, and now I'm going to be looking for more shorts in the market. Okay, so that's exactly what I've done, and that's why I hedged the position with the Anglo, which seems to be still dropping down quite dramatically. It showed otherwise on the 15-minute where it showed some upside, but like I said, it's better to lock in some profits and then wait for the next trade, especially the fact that we've had 100% win rate this quarter. If I show you quickly on the master portfolio, we've had 6 winners so far. ShopRite's in the money, but we've had 6 winners so far, which gives us a 75% win rate, which is looking great. And now in the next trade, I can even make us risk a little bit more, because obviously the reward will be more, but we can also afford it. So that's exactly what I've done. We can look at next our ShopRite. We don't need to go to the watch list as of yet, purely because trades are lining up, but I don't want to just rush into trades. The most important thing about trading is you don't want to just trade for the sake of it. You want to wait for a beautiful setup, and also you want the market to also be in a strong trend, okay? Which it's entering into an even stronger bear trend, considering that it's broken below the inverse cup and handle, and now if it opens below it, we're going to look for more shorts. So here's our ShopRite. Here's that beautiful W formation that I saw, but not only that, I also saw a cup and handle in the making. So you can see here's a cup and handle, here's it's called the brim level, and once it breaks above this level, we can expect it to shoot all the way to our take profit. Our stop loss, I did raise it a little bit compared to where it should be, and that's because, you know, I don't like losing more than 40 to 50% of the margin that we put in. 50% is the max, but also because it's starting of the quarter and we're just dabbling in it. So to grow our portfolio, only then I will be raising dropping the stop loss even more, and also raising the take profit so we can bank those double-digit 50, 60 to 100% gains, which generally happens in the second quarter, third quarter, etc. Okay, but I do expect a losing quarter now and then. Remember that is just trading. That's just how I expect it. So this 100% win rate, don't expect it to just continue. It's never happened to me in 13 years. But you never know. You could have actually a fantastic year with a 70 to 80% win rate. We don't know. On average, my win rate's gone down to 62.5%, which I am content about. As long as it's more than 50% and our winners outweigh our losers, our portfolio is going up. Okay? So here's that cup and handle that I showed you. It's broken out. And now what it's done is it's entered into a conservative level. Now, conservative level is where it breaks out of a formation, then it goes back down to test the brim level before it goes back up. And this here, this is a hammer. This hammer is looking excellent because the high and the open is very close to where it currently is at the moment. So we can expect more upside for ShopRite, which could be another winning trade. So that's all for this webinar. Basically, you just need to know is that I will be expecting some more shorts in the market. Even if trades do line up for longs, I'm not sure. I'm going to be focusing on trying to short it and try and get this downside purely on resources, and even industrial is fine. If it breaks above 45,000, that will be the level that I expect the market to continue up, and it could be going to all-time highs. But until then, we'll just have to wait. And congratulations on this quarter. It's really been great. It's time to have a level head, because it's not about what we've achieved. It's about where we're going in the market. So if you're enjoying the service and you'd like to comment, or you have a question for me or anything, you can ask me on the investorsclub.co.za. I'm always here to answer your questions. Or even if you want to tell me how things are going, and if I can help improve, that's exactly what I'm here for. So have a fantastic week and month, and keep your phone close, because trades are lining up. And I'm probably going to, just give it a day or two, and then next week we'll be back into action. All right? Have a fantastic time.